Canada's oil and gas stocks are a fantastic opportunity right now. They present some really fantastic assets at a huge discount with massive potential. And I think this entire industry is set up for a fantastic next few years. The challenge is, of course, that so many people are so bearish on this industry, thanks in part to government moves, thanks in part to the fear of recession, thanks in part to the lack of market access, and thanks in part to historical returns. And I think there are three critical factors that investors need to look at when considering this industry that will convince you that Canada's oil and gas is going to be a better asset in the next 10 years than it was in the last. Welcome to Golden Arch Investing. My name is Liam. On this channel, we love to talk about investing in Canada. Today, we're going to be covering investing specifically in Canadian resources, specifically talking about our oil and gas industry. On this channel, we love to talk about this kind of thing. And so if that interests you, please do subscribe to the channel and like the video. It makes a massive difference and it doesn't cost anything. I have been researching the oil and gas industry heavily for the last couple of months. It has been one of those investment opportunities that I've seen coming over the last while, but that has really crystallized in the last couple months as the world seems to be in a position of turmoil. I think there's a couple things specifically that make Canadian oil and gas so valuable. And so I am going to cover those three topics. Now, I've got a million notes on the screen right beside me here, so forgive me if I'm constantly looking back to them because there is so much information to go through here, and I want to make sure I get everything as clear and concise for you as possible. The first major opportunity, and the one I've been talking about the longest, is Canada's infrastructure revolution. Now, this is headlined right now by the Trans Mountain Pipeline expansion and LNG Canada. This is a combined $70+ billion worth of investments, bringing Canadian energy exports to the Pacific market. And this is a massive game changer for the industry. It has already moved markets with the differential between WCS, Canadian oil, and WTI, American oil, at lows in the range of $8 versus $15 just a year ago. It also has pushed Canadian natural gas much closer to the American price. I've seen industry experts project that LNG Canada will push the differential down to $1.10 from its historic $2 in the natural gas space. That means that Canadian companies suddenly have unlocked a gigantic amount of free cash flow, and most of the time, they haven't had to put up a penny up front. Instead, these big Canadian producers are able to expand their production and to make way more money from the assets they already have. And the best part, the thing I've been so excited about, is that there is much more infrastructure coming down the road. Now, you might see that there's a lot of political waffling about the concept of pipelines. Are we going to build them? Are we not going to build them? What is going to happen? But I strongly believe that Canada will get some of these projects done. We've seen polling indicate that 75% of the population supports east-west pipelines going from the heartland of Canadian energy in northern Alberta and northeastern British Columbia out to the coasts, both on the Atlantic and the Pacific. This would maybe include following the former Northern Gateway pipeline, which would go up to Prince Rupert or at least to the northwestern coast of British Columbia. Could also include a new Energy East, which would take a pipeline straight across to the Atlantic, somewhere maybe in Quebec or all the way down into New Brunswick. These projects would be absolute multipliers to the free cash flow of any Canadian oil and gas stock. When you look at the amount of money these companies make, a few dollars can be a huge amount. If, for example, their break even around $40, and right now the price of WTI oil is $60, and so they make maybe $52, they're only getting $12 in gross profit per barrel. If then you see the WTI price bump up to, let's say, 70, closer to what it was a year ago, and you see the differential cut down to $2 or $3, well, all of a sudden they're making closer to 25, 26, which is double the amount of gross profit they were making. That is the potential here, where these companies that are trading at let's say conservatively 6 times free cash flow, all of a sudden would be significantly undervalued if they were making so much money. And so the stock price would have to react to make up that difference, pushing up somewhere in the range of 100, 200% for some of these firms. Now that's just the differential being eliminated. But by creating more export capacity, we've also seen a lot of argument for production growth. One of the companies that has championed this movement is Tourmaline Oil, who has put forward a huge amount of potential production. They have been absolutely preparing themselves for LNG Canada coming online and preparing to dramatically increase the amount of natural gas they alone produce. If we then saw several other projects coming online in the next 10 years, we could see every company, or at least all of the major companies in this space, suddenly dramatically increase production. Logically, if all of a sudden these companies are increasing production and have increased the amount of free cash flow of gross profit per barrel of oil or per foot of natural gas, then all of a sudden you are going to see massive, massive stock price growth. Now we're not talking 100, 200%, we're talking 3, 4, 500% gains. Is this guaranteed? Absolutely not. But it is an absolute game changer. And when these companies are offering you 5, 6, 7, 8, 9, 10 more for some of the miners, you all of a sudden are being paid a great dividend to hold and wait. Now this brings us to one of the reasons why I think you can afford to hold. And that comes from reserves. If you've ever heard the story of the tortoise and the hare, you know where I'm going with this. US shale oil is the hare in this story. They absolutely bolt onto the scene in the mid-2010s. It brings a gigantic amount of American production, turns them into an energy superpower, the number one producer, and dumps the oil price. If you look at all sorts of Canadian economic numbers, not only just the oil price, but also if you look at Canada's GDP, GDP per capita, all sorts of numbers took a nosedive between 2014, 15, 2016, 17. Throughout that period, we saw those numbers slashed. And a large part of this was because US shale oil suddenly jumped on the scene and Canadian energy exports got cut. This boosted the differential, caused a lot of problems in the Canadian oil sands space, and forced some innovation. But crucially, US shale oil is nearing its twilight. With oil prices at $60 a barrel right now, there is no room for American producers to grow. They cannot invest tens of millions of dollars drilling new wells at $60 oil. And the options they have are dwindling. We have seen discouraging numbers for the Permian. We have seen industry experts claiming that they've got years, not decades left of production. Here in Canada, we've got companies saying that they could continue to produce, stay flat for 32 to 50 years, depending on the company. There is approximately 165 billion barrels of oil reserve in Canada, and that is only what has been proven. We've seen recently massive amounts being proven every single year. That means that Canadian producers with these long shelf life oil sands assets that have been at a discount are going to be at a premium, and soon. There are plenty of maybe small or mid-cap companies where that is basically the entire investment argument, that these companies have these assets that are going to be worth a lot and that will be acquired. But if you're willing to hold a major, really strong, cash flowing, dividend paying Canadian producer, well, you've got nothing to worry about for 30 years. And if they're going to pay you out 9% that whole time, well, it pays to hold and it's worth taking a flyer. And on top of that, of course, shale oil is going down. And production of Canadian assets is going to be a major, major play here. I have seen, like I mentioned, I have seen industry experts claiming that US shale oil has years to go. I've seen some experts saying that already we have seen the peak in investment and growth in US shale down in the Permian, which means that money needs to go somewhere. And all of a sudden, there's a huge argument for large M&A in the Canadian space, for large institutional investment in the Canadian space, and just generally for a re-rating of Canadian assets up to that premium level that we saw in the early 2010s. If you look back at some of the share prices of Canadian majors like Suncor and Imperial back then, you can see why this is a big deal. And if you consider the growth and innovation Canadian companies have shown in that time, the decline of US shale is really, really important for these companies. To go with those three elements that I think will propel this industry forwards, that will build huge amounts of wealth for Canadian investors, I have three challenges that I think this industry has to face. And the first is environmental and regulatory uncertainty. In Canada, we simply do not seem to get out of our way when it comes to investing in these companies. This comes in forms of difficulty building pipelines, sure, but it also comes in form of massive amounts of expense when drilling, with difficulty increasing production, with difficulty with emissions caps, with difficulty every step of the way. Every step of the way, these companies complain about the regulatory framework. And you might argue that that is a good thing for the country. But from the industry's perspective, that has been something holding them back. Now, considering the fact we're in the middle of a federal election, obviously that is uncertain. But it's almost impossible to see these companies hit a much higher valuation when there is that kind of uncertainty in the industry. If at any moment you could see the government kneecap the oil and gas industry, it's hard to argue that big institutional international money should flow into Canada. The second big challenge, of course, is recession. Right now, we are staring down the barrel of the recession gun, and it's really uncertain whether or not it's going to go off and we're going to see a cascade of different challenges come along. And it kind of feels like this has been a long time coming, because people have been talking about recession as if it's on the precipice since COVID started. But while there was a massive crash, and obviously there was a huge amount of challenge back during the pandemic, now that we've gotten out of it, we seem to have gotten through the first big wave of inflation. This recession would be almost entirely caused by all of the uncertainty with the American administration. Now, there's no guarantee that this uncertainty is going to continue or if it's going to go away, but you can't argue that big money is comfortable right now. And usually when big money is uncomfortable, it means that consumers are also uncomfortable. And when they're uncomfortable, money is kept at home, investments aren't made, productivity doesn't grow, people don't get raises, and all of a sudden, we're back in one of these slow grind down recession moments. Now, obviously, if we see some sort of concrete end to the trade war specter, we could maybe see a recession staved off. But there's definitely the potential for recession this year. And every percent that you see world GDP drop, you see 1 million barrels a day of demand drop off. Now, this is going to be huge for all sorts of companies, but if you're a Canadian company, you are at risk because there is always a cheaper supplier somewhere. That's a big challenge for a lot of our firms. And when we're in this point of just starting our sort of international push, if we see that cut down, we could see the differential increase again. So we could see it back up to 10, 11, 12, 15, 20 dollars a barrel as WTI drops. Well, right now, most Canadian companies are just about good until you see the mid 50s, low 50s WTI. Some of them might be in trouble already. And while the big fortress balance sheets are pretty much good no matter what happens, you might see things like dividends being cut. You're going to see capital expenditures shaved, and you're going to see buybacks not happen at a time that it would be so valuable for so many of these firms. And this goes hand in hand with number 3. What if the United States puts a tariff on Canadian oil? As much as the big projects coming online are a huge deal, The reason why there's such a huge deal is because we already export so much down to the United States. And by eliminating the differential between Canadian and American crude, we would suddenly see a huge amount of value brought from not only the international trade, but then also the American trade. If that doesn't happen, or if there are massive tariffs put on this industry, we could see some companies start to crater. And that would be a real risk for a lot of investors that put their money into firms with maybe higher growth prospects or a lower valuation, but also with more debt or more risky balance sheets. Now, with those massive bull elements and those bear elements, I predict that we are going to see some positive momentum in the Canadian oil and gas space. We are going to see some projects get built. Maybe not as many as we would hope for, but some projects get built or at least announced. We are going to see some institutional money move into Canada. We are going to see some sort of environmental or regulatory easing, but not as much as the industry would like. And therefore, we are going to get some of my bull case returns. I do not expect 500% returns on average in the Canadian industry over the next 5-10 years. Don't get me wrong. I'm not saying you're going to make 100% a year. You're going to, become a millionaire in a couple years just by buying Canadian oil and gas stocks. But I do think that you are likely to get some fantastic dividend returns. You are likely to be rewarded handsomely for holding. And if we see major obstacles put in place in the short term, buying these companies and allowing yourself to dollar cost average, to reinvest dividends, might be one of the best investment decisions of your life. Because then you are going to be in a position where you have built a large stake in some of the larger, safer Canadian oil firms. Right as the next 5 years runs out, US Shale really is at the end of its growth cycle. And all of a sudden, all of these elements come true. All of a sudden, regulations get out of the way. All of a sudden, we see major Canadian producers have access to the Atlantic or have another access to the Pacific or have the, additional construction of more export capacity at LNG Canada. And then suddenly you're going to see a massive re-rating of this industry in just a couple years, where you could see a slow period here for a number of years, followed by a boom. That is what I believe might happen in the Canadian oil and gas industry. But either way, I think a lot of these companies are worth looking at. And I strongly recommend you check out either any of my videos talking about some of these companies, or at least you go check them out on FinChat. You go see what people are saying on Seeking Alpha. You go check out what people are saying on other sites like BNN, CNBC, even just what other YouTubers are saying, because there's so many interesting companies. And if you are a Canadian investor, if you are a dividend investor, if you are a value investor, even if you're a growth investor, there are Canadian energy companies that might interest you. So go check them out. And that's about all I have for you folks today. With all that being said, please let me know your thoughts in the comments down below. I really love to talk about this stuff with you guys. So, if you're bullish, if you're bearish, if you agree, if you disagree, if you think that I'm completely on the wrong track, let me know. I want to hear it, and I want to hear it from you down in those comments. And of course, if you like the video, leave a like. And if you like the channel, please do subscribe, and I will see you in the next one.